Welcome back to the channel. My name is Brad, and today we are going to look at the best index funds for 2025. If that's what you're looking for, stick around. So, full disclosure, Brad's been retired now 7 months, going on 8. We're going to look at 2025, and in this criteria, I am looking at S&P 500 funds, and I am looking at NASDAQ funds. I did not consider the Russell or any others. Some of these are not 100% on one or the other, and I did throw some wild cards in there just to keep you guys on your toes. So let's dig into this and see who you may or may not want to invest in. And none of this is financial advice, legal advice, or accounting advice. I am just some random guy out on the internet that's retired that has nothing better to do with his time other than look up what all these funds have done. So let's get into it. And what I did on the very first chart, I broke this down as total returns. So we're going to go from total returns down to the lowest total returns. So let's go ahead and knock this out. So here we go. XDTE. Woo, doggy. We got the best total returns and we have the highest distribution rate. But we also have, the lowest price return. Now, XDTE did not have a full year's worth of data, but I threw it out there because everybody wants to talk about it here and there. The next one on the list, ready? It is PBP. Okay, Brad, where did you pull that one from? Because I haven't seen anybody talking about PBP. Where is this from? And if you don't know, this fund is from 2007. Oh my gosh, wait a second. 2007, cover call ETFs do not last through the great financial crisis. And there's no way that they could live through the pandemic. What do you mean this was in 2007? Sorry, ladies and gentlemen. Sorry for the skeptics out there that cover call ETFs can't survive the great financial crisis or the pandemic, because PBP somehow magically survived and it has the best total returns year to date. It's got a good price return and the distribution rate's not that bad. And look at that. Moving on down the list, XYLD. Ooh, man, wait a second. I maybe need to take a better look at XYLD because that one rises up to the top of the list. And look, it gets well above 10% in a distribution rate. Might need to take a look at that one a little bit closer in the future. Now we're going to go to GPIX. GPIX, wait a second, nice, good total returns, nice distribution rate. We'll see how that one works out over the future. But we're going to move on to Devo. Ooh, just don't like that distribution rate. Just going to throw that out for a conversation. Now, we're going to go to iSpy. Very good, good total returns, okay distribution rate. Next one is Bali, BALI. Wow, look at that. Good total returns, distribution rate just not quite where I would want it to be personally, but that's everybody's financial decision on your own, just presenting the data. Next one is my favorite, SPY. Look at that. Decent total returns, okay price returns, and a great distribution rate. The next one in line is FTHI. Brad, where are you pulling these out of? Who talks about FTHI? But look at that. Okay distribution rate, good price return, and it is right there with SPY for total returns. Next one on the list, DJIA. Okay, you know I am pulling the bottom of the bell now, and it is decent price return. Look at that on distribution rate, well above 10%. The following one is PUTW. Now, I've talked about that one in the past, so that shouldn't be a big surprise. And the following one, for all you JEPI fans, is JEPI. Lowest total returns, not so great on your distribution rate, and price return, better than some, but not the best. We're just going to leave that for you to decide, just presenting the data. I now sorted it by distribution rate. And we just want to go right down the list real quick. Devo, Bally, JEPI, GPIX, FTHI, iSpot, PBP, DGIA, XYLD, PUTW, SPYI, XDTE. Just sorted it by distribution rate. So you get to pick what you want and what you're trying to accomplish. I try to accomplish a decent price return, especially in a huge up market like we had last year. Would like to see some price appreciation, just throwing that out for conversation. And I look at building my income stream. Nothing wrong with everything else. I'm looking to build my income stream because I am in retirement. So income stream is important to Brad. But just presenting the data for you to make the decision on what you might want to do. And lastly, I looked at this as price return. And I look at that point, XDTE is the worst price return, PTUW, DJIA, SPYI. Maybe need to take a better look at that one myself. Then it comes JEPI for my great friends at JEPI, XYLD. XYLD had better price returns than SPYI. Need to take a better look at that. FTHI. Then comes iSpy, EBP. Still another one that I'm sitting there going, I scraped the bottom of the barrel for that one. And then GPIX, Bally, Devo, and then SPY, of course. So now you get to look at the chart going, which one had the best price appreciation over the last year? Keeping in mind, XDTE is not quite 1 year old, but we're going to say, hey, we're coming up there, so let's go ahead and throw it into the list. So I went out to DeepSeek and I uploaded the Excel spreadsheet into DeepSeek and said, tell me which is the best income fund for retirees. And it told me XYLD wins. And it says avoid XDTE. Just telling you what DeepSeek had to say. So don't blame Brad on what DeepSeek said. Just pointing out the facts. And XYLD might need to be talked about a little bit more in the future. Just throwing it out since that is what DeepSeek actually said. Now I'm going to go just look at some price charts real quick and show you price return. I look at price return going, I can understand price return is important. And I look at that going, very good. Let's see that we have some price appreciation. But remember, we were in a bull market. When I look at total return, that's where we get into some of these other funds outperforming. And again, XDTE was not around for the full year, so they have a slight disadvantage. But if you look at XDTE on their chart from when they were started, they are beating the S&P 500. Now, I didn't put T-SPY into the consideration, but I'm going to just throw T-SPY up against XDTE and show you that I like a little price appreciation. I will take a slightly less distribution rate to have a little more price appreciation. And if I throw it up against XDTE and T-SPY, just behind just a little bit, I can't complain. So that's why Brad goes with T-SPY over XDTE. Just want a little price appreciation. And this all has to come down to synthetics. XDTE is doing nothing wrong. If you don't understand about synthetics, they have to pay you the gains. So if they sell a poor man cover call, they're going to just pay you the gains. They're doing nothing wrong. That's what they have to do, or they have to pay the taxes on it. But Brad's done talking about that. Let's go ahead and move on to the NASDAQ. Yes, everybody loves the NASDAQ. Who doesn't love the NASDAQ? And it works out to be in total returns. GPIQ, TDVI, QDTE, JEPQ, QQQI, QYLD, and IQQQ. That is just interesting how that all turned out. That it just seems to be slightly different than what I would have expected. Remember, QDTE wasn't around for a full year. Just got to hand it to them that they have done very well. But I look at price return and say, might not be something that Brad puts into his portfolio during a major bull market. I would have liked to see a little bit better price return. Now, if I break this down to distribution rate going from left to right, QDTE wins, followed by QQQI, QYLD, JPIQ. Then we have JEPQ, IQQQQ, TDVI, and QQQQ. Now, I'm going to just go ahead and say TDVI is a really good fund. I really do. I just wish the TDVI had a little bit higher distribution rate. Just a conversation about that. But I look at this started out of where these are distribution rate wise compared to everything else. Lastly, we're just going to go ahead and break this down as price return. Highest price return was TDVI, JEPQ, GPIQ, IQQQ, QYLD, and QQQI. Just breaking it down. Oh, lastly is, I didn't even want to talk about this, QDTE. Just breaking out price return. And last one, I'm just going to go ahead and throw this out. I have two more that I'm going to throw out just for conversation. And that's QDVO and QQA. Unfortunately, they didn't make the list because they haven't had enough history in the last year. So I look at this and decide it's all up to you. I'm just presenting the data. Do you want more income stream, which is important to Brad in retirement, less income stream with better total returns? Do you want income stream and price appreciation? Do you consider price appreciation more important than income stream? All up to the individual investor. And this is not financial advice. This is just presenting the data so you have something to think about over the weekend. Because what else do you have to think about on this weekend? No football. So go ahead and look at the charts, decide what you want to do, because there is no right or wrong answer. There is only the answer that you decide. So until next time, God bless.